Hey everyone, Charting Man Dan from ChartGuys.com. You know, behind every single video that we put out every single day, there's a wonderful community of traders that we want to invite you to be a part of. Try the free 7-day trial and gain access to our live market broadcasts every morning and afternoon, interact with hundreds of like-minded traders, or take part in one of our dedicated chat rooms, each led by an analyst that's there to answer your questions in real time. Our trial is risk-free with absolutely no commitment or credit card required to experience the TCG community. For those looking for a head start in technical analysis, check out our entries and exits course in the link below in the description. Get up to speed with the fundamentals of TCG technical analysis and experience over 5 hours of great community-driven trading education.
Hey guys, it's James with the Chart Guys. It is Thursday, May 25th. Going to do my nightly video on gold. So I mentioned yesterday that gold is in this range, this tightening triangle range where we're getting tighter in this triangle, and hopefully we'll get a break soon here. And if you want to, you can throw hourly trend lines in there and see what that range kind of looks like. Get a little bigger here. So you can draw your downtrend line here, starting here. And you can draw your uptrend line somewhere here. So you can see clearly that we're getting, the range is getting tighter here. And what that looks like on the weekly is we may just range for the rest of the week because the weekly is forming an inside candle here. And what inside candle is when the, let me remove this drawing. It's when the high and low of the current candle is within the previous candle's high and low. So the high here is 1263.80 and the low is 1247.60. If we do stay in the range for the rest of the week, which I think we will likely, at this 50 MA resistance here, looks like it's a battle between that 50 MA resistance and the 4 and 80 MAs here. It is getting a TCG bull cross for now. Again, TCG bull cross is where the 4 EMA crosses above the 8 EMA, green over the red. And last time we got that on gold weekly, got some nice upside. Boom. You can see it had that cross and we had some more upside. So we are forming this inside candle. A bull break next week would be a break above 1263.80 and a bear break will be below 1247.60. So for now, I'm expecting us to just range in that daily pattern and just get tighter for the rest of the week with one trading day left. US dollar, Japanese yen. You can see on the daily. See on the daily that we are still rejecting at this the 8 EMA. And so for the US dollar, Japanese yen to move any higher, we're going to have to capture this 8 EMA. Like we did back here. Once you capture the above the 8 EMA, that's when you usually get moves, when you get these TCG bull crosses here. And to get a TCG bull cross here, we're going to have to cross that 8 EMA. If we cross that 8 EMA, expecting a back test of the 20 EMA. Looks like it's starting to curl and form a top here and could be curling down. So we may get a test without it breaking the 8 EMA. And if that 20 EMA comes down and we're unable to break above that 8 EMA, which is currently at 111.82, then I'm expecting a rejection and more further downside here, which would be beneficial for gold. And this is potentially a rising wedge. A rising wedge is a bearish pattern where draw some lines here. Start here and draw a wedge here, and then something like that. And so it looks like a rising wedge potentially forming here on US dollar, Japanese yen. Which is, again, a bearish pattern. We'll have to wait for that break. So we'll see what happens. And as far as the miners go, GDX, daily, all the miners have inside candles, bull and bear miners. Same thing as I said, inside candle is the high and lows within the previous day's high and low. So a break above 22.83 tomorrow will be a bull break. Break below 22.49 will be break below 22.83 would be a bull break on the senior miners. Break below 22.49 will be a bear break. Junior miners had an inside candle as well. For the junior miners, break above the high of 32.07 will be a bull break. Break below the low of 31.40 will be a bear. 32.07 will be a bull break. Break below 31.40 will be a bear break. What do I have these lines for? It looks like just a weekly tightening pattern here as well. You can see that we are getting tighter in this pattern, and you can see that GDXJ continuing to set. We have this high, we have this low. we have a lower high, and so far we do have a higher low from this big pullback here. So if we need to maintain the low here of 29.33 on GDX. That's an absolute must hold, or we are likely going to break this pattern to the downside. And if you look at the hourly here on GDX hourly, seems like we're in this channel right now where we have 2 touches at the bottom and 2 touches at the top. So we really need ideally another third touch here at the top and then a back test here for it to be a real channel. But we'll see how this breaks. This is anyways, we do have this hourly downtrend line that's clear, and you can see that the senior miners right now are still forming lower highs. So we have this high, we have a lower highs, another lower high on this bounce attempt, and we've been setting lower lows. And so if this is the true pullback here after this bounce attempt, this is going to be the higher low that we want to form. And then proving that this is the higher low and we're going to break this pattern, we need to break above the higher of 23.02. If we're unable to break that high and we could continue to curl down here and reject out that 20 MA hourly, and then we break below the recent low here of 22.49, then that's going to be a red flag and obviously break to the downside. And of course, if we do break this low of 22.49, that's going to be a bear break of that inside candle anyway that I mentioned on the daily, which would be a bear break of the inside candle, and likely seeing further downside. And we have been pretty much in a range here, and you can see that after losing the 80 MA, I was looking bearish, but then yesterday I had this huge bounce off the 20 MA here, and then losing it again today. So I'm just going to wait for this inside candle pattern to confirm the bear or bull break to see which way I want to play it. If it does break bull, then likely we're going to regain that 480 MA, and I'll start continue to look bullish with confirmation. Break above the mother candle of 22.98, the high there. If we break below that 22.49, confirmation by breaking below the low yesterday of 22.20, and then of course, if we do break below that, likely losing that 20 MA on the daily. So have a good night, and I'll see you tomorrow.